Well, welcome to this presentation on a particular method that I have for analyzing currency prices and preparing for trades or opportunities using Fibonacci analysis. And I really am excited to be able to do this presentation to a new audience. And obviously, I know what kind of traders participate in these forums, so this is a real honor for me to be amongst you right now. Of course, I'm John Jagerson, and if you have any questions at all about my presentation or would like a copy of the PowerPoint, you're welcome to it. Just send me an email at john@pfxglobal.com. So let me talk about a little bit about why I developed this particular strategy. I love to use Fibonacci retracements. I'm one of these traders who relies on it very much. And one of the reasons why I like Fibonacci analysis so much is that it's a great way to project price levels either for price targets or for entries, consolidations, stop losses, etc., where I don't have any lag in the indicator. So although I am a big fan of oscillators as a technical indicator, one of my big complaints about them is that they lag a little bit. Well, Fibonacci's don't suffer from that kind of problem, so I really favor them quite a bit. The problem is that while a Fibonacci retracement can give me a really good idea about where a retracement is possible or at what levels I could be looking forward to a retracement, or a stop or a target or what have you, I don't really have any idea of when the price will get there. So I've developed a method that helps in some cases add an additional layer of information and by giving me some insight as to when. So I'm in this case, I'm going to be using Fibonacci retracements and Fibonacci rays or fans. So I'm going to go down here the list a little bit. Here's just a couple of rules, okay? I'm going to be using fib retracements and rays or fans. I'm going to be using the same highs and lows. So when we're drawing a Fibonacci retracement, typically we draw it from the top to the bottom of a trend or vice versa. And I'm looking for periods of time when the fan level or the ray level and the retracement level and the price are all converging at the same point. And I'm going to give you an illustration of exactly what I mean by that. Here's a illustration of the British pound Canadian dollar cross. This is kind of an unusual cross, but I really like it. And as you can see here, recently the market had been forming this really nice retracement, and then we had this just tabletop resistance level, a very firm resistance level. The market just could not break through it. Well, I drew a retracement from the top of the trend to the bottom where we had this significant retracement. So I'm from the top to the bottom, and at the same point, I also drew some Fibonacci fans from the top to the bottom. And as you can see, and as we would obviously expect, there are several places where these Fibonacci levels cross each other. Well, what's interesting is that it seems to form kind of a self-fulfilling prophecy of sorts, where if I get the price, which we can see here, coinciding with the Fibonacci retracement level and the fan level at the same time, I very typically see breakouts, and generally the breakouts are in the direction of the previous trend. So in this case, we were popping back up here. This retracement level and the resistance level are right there, and we would expect the market to go down, which in fact is exactly what happened the next period. Subsequently, we've had some whippiness in this pair, but the breakout was legitimate nonetheless. So, of course, just highlighting exactly the condition that I'm looking for. As you can see there, that shadow just came right through and intersected that fan with the retracement point. Here, let's take a little closer look, and you'll see exactly what I'm looking for. It's not often exactly on the crisscross, but we'll go into the live market, and we'll look at a couple of examples. But you'll notice I knew that there was a potential convergence there back here. This was the point, this was the low that I drew my Fibonacci retracement to back in the first part of June. So I'm watching, and I know that in the beginning of July that there is an opportunity where if price coincides with this little crisscross there, I have a trading opportunity. And sure enough, getting in the next day, or getting in the next period, you can use this on an intraday basis, and I'll show you how to do that. the market dropped a little over 200 pips, which on this pair is quite a nice little return. The each pip is worth on a full contract about $9.50. So once again, a couple of rules, and remember, let's have some fun. So why don't we jump in and we'll take a look at a few charts, and we'll draw these together so you can see exactly what I'm talking about. Now I brought up a picture here of the pound Canadian dollar, and I'm going to draw a retracement from the top of my trend all the way down to the bottom. This is exactly like I showed it on the slide, and I'm illustrating it here just so that I can show you exactly what I mean. So this is a very standard way to draw a Fibonacci retracement and looking for support and resistance levels. In this case, we'd be looking for resistance. We know we already have this amazing resistance level right here. Now pretend that we don't know how the price worked out. So we're back here, maybe we're all the way forward here into towards the end of June, when the market has clearly retraced and we've decided to draw the bottom of our retracement level there. And I am going to show a couple of examples of what this looks like going forward, because there are some opportunities coming up that on some other pairs that are very interesting. Okay, I'm going to pull up my fan, and I'm going from right here down to the bottom. And as you can see, I'm going to zoom in on this. Boom. We got that great cross right there. The very next day, we got a retracement. Now, I'm short this particular pair, and we got a little we've got a little whipsaw here. Not shocking. I'm not surprised. And but we've continued to treat this diagonal fan line as resistance, and it looks pretty good. A lot of the questions that I get quite frequently are, well, where would you set your stops or limits? The place that I set my limit, and this is just an initial analysis because I'm a big believer in the fact that if you marry yourself to your analysis from day one and don't change it when new information is given to you, it's a little foolish. It's like trading blindfolded. So I'm going to address this as, well, here's my initial stop and resistance levels. But as new information arrives, I'll be changing this and modifying my own attitudes about what's going on in the market. The second thing that I want to say is that I am very, very liberal with my stops, and the reason why is that I see too many new traders, and to a certain extent, I suppose we're all new traders, getting whipped around in their accounts just like crazy, because they refuse to treat their stops as protection and instead use their stops as a predetermined exit point. Well, the problem is if you set a stop that's very, very tight, so let's say we set a stop just right up here, well, you're going to get whipped out, and you may not be ready for that yet. I would much rather have my exit be a much more conscious decision. So what that means is that I found this analysis to be very predictive, a little better than about 50% of the time. And I would target this lower level right down here, which is about 600 pips away. So getting in at the beginning of this day, up around 2.1419, I'm looking to be able to get out way down here at 2.083. So I've got a lot of room to go. And if I have, it's a little closer to 700 pips. If I have 700 pips to the downside that I'm looking to see the market descend to, well, I'm going to give myself a lot of room and maybe cut it in half and split the difference with a stop that's up here at around 217. That's a 350 pip stop. But I want to really remind people, I'm not saying that I'm not going to get out unless that stop is hit. I just have that stop in there in case I'm indisposed or the market runs away or a catastrophic issue occurs or whatever it is. To me, that's the purpose for a stop. A stop is not for me to a predetermined exit point. So if the market continues to shimmy around here for a while, and in fact goes up above this resistance level, I'll probably wind up getting out here in this area. But I really want to wait until I see more and new information every day. Today, for example, we had retail sales that came out in the UK, and that gave us a lot of information that I would have loved to have had back here, or even back here a couple of days ago. So the point is that every day you're going to learn a little bit more, and I continue to reevaluate my trades based on current information. And the same goes for my limit or my profit target. So moving along to another example, this is an intraday chart of the dollar Canadian. I've gotten a lot of questions about, and I know that Forex traders love to day trade. The short-term trading is a lot of fun. So look, here's this analysis works quite well, I have found. Let me show you. Now, this is another example that happened in the past, but you'll get the point, and then we'll move on to an example that a couple of examples that we're looking to in the future, as well as I would remind you that the one that we saw on the pound Canadian is an ongoing example. That's a trade that's still in place, although the signal was already generated a few days in the past. So there's a 1 hour chart on the Canadian dollar, and this is one that popped up to my attention, obviously, a few days ago. And I'm going to go from the top of this nice trend down to the bottom. Now, I was doing this analysis as we were getting up towards the top here. So we had already experienced a little retracement here, which had alerted us to a opportunity. So let's put our fan levels on this. We're going to draw it from the same two levels. So we're duplicating our strategy. And I have a theory about why this works. I feel like that potentially the reason why it works is that we're duplicating the analysis of a lot of different traders who are looking at the market in different ways. So when the market when we add this analysis, it increases our probability that a trade here is likely to be valid, because we're combining principles of support and resistance, a Fibonacci retracement, fan lines, etc., that are probably being used individually by a lot of other traders, and to a certain extent they may be pushing the market based on their technicals. And the advantage with this compared to the traditional trap of indicator piling, where you just start slapping a MACD on top of a stochastics, on top of an RSI, on top of a Bollinger, whatever it is that you don't start building in lag. They don't build lag. Now what you'll notice is right here we had this little convergence. So we were building this analysis of the market was beginning to turn up, and we knew that there was a convergence that was happening right there. We knew there was another one right here. And not only did we know that it was happening here, but we knew in advance what time it could happen. So we could just set an alert that we go down there and check. And if the price is there, then we go look at our analysis and see, well, okay, so I've told myself that I'm interested in if the price is there at a specific time, then I want to go check it out, which happened. Obviously, the price, you can see here, I'm going to zoom in a little bit more. And obviously, you can see we had the price coming right down through that convergence, getting in the next period short, which accommodates our previous trend without any. And the advantage here, of course, is that there's no compelling fundamental reason to think this trend would be invalid or that we would want to go long potentially or anything like that. So we're going short at this point, and the market, sure enough, came right down and would have had a nice opportunity for 40, 50 pips or so. Let's take a look at another example that is a little bit more forward-looking. I actually have two examples to just really drive the point home and help you understand how I would do this analysis in real time. The first is on the yen, and the second one is on the Mexican peso. And actually, I think we'll do that one first. So, and they're both on the daily chart, so we can look at and see how these actually work out in real time together. One's happening today, and the other one is coming up here shortly. All right, so let's take a look at the Mexican peso, and I'll show you exactly what I mean and how I would start planning for this opportunity in the future, and then we can see how it works out. Now, by the way, I realize that not a lot of Forex traders are actively trading the peso. And I get questions oftentimes, and I can already see a couple of questions as to, what's the deal with that. The reason why I like the Mexican peso is that it is actually quite actively traded as a exchange-listed futures contract on the Chicago Mercantile Exchange. So that's where, before the spot market, traders were trading currencies on the Chicago Merc. And one of the contracts that's been available for many years is the dollar Mexican peso. So it has nice liquidity. It's got a lot of interest from hedgers and speculators as well. So I really like it. So what I've done is I've drawn my retracement from the top of this trend all the way down to the bottom. And I drew this when the market just started to take off like this. So pretty reasonable analysis, correct? Number 2, I drew my Fibonacci fans along the same point. So it's then projected them through here on their respective retracement levels. And from here, so it was right about here that I was drawing this analysis. And from here, I could start looking forward to, well, where are my crosses in time? I could see one here, price never got there. I could see one here, price never got there. And then a few days in the future, I could see one here. Well, so the opportunity is that the market has come right up to that level. This was on the 22nd of June. This, by the way, is part of my argument about really wide stops, because how many times have you been right on your analysis but then been stopped out too early? I just got to say, it's really worth your time and effort to make a wide stop and to give that some consideration. Because if you're not ready to give up on your analysis yet, why prematurely allow your trade to get out of your control? So I'll get off my soapbox now, but that's part of my argument. And you'll notice that the market did pop up a little bit. Maybe we would have decided to get out. Maybe we wouldn't have. I didn't decide to get out, and sure enough, the peso continued its trend and has now nearly reached its profit target. Now, however, I want to add that there is another opportunity coming up here. I'm going to draw a circle around it right here. So you'll notice that the price is not that far away, and I have a cross here. This is going to happen. This cross is going to occur on, you can see on the little pop-up in my window there, on 7:30. So July 30th, if the price is here at 10.7035, I may have a trading opportunity, and I will want to make sure that in my little trading journal, I'm not ignoring this opportunity on 7:30. In case I haven't looked at the dollar Mexican peso in a little bit, I want to make sure that I come back, look at it, and try to see if there's an opportunity. This is obviously very useful in the intraday charts when you can say the same, you could run this analysis and you could say the same thing about, all right, I'm going to come back at 2 o'clock in the afternoon when this convergence is likely to happen, and if the price is there at 2 o'clock, I'm going to make a trade. If it's not there, obviously I'm going to walk away. I think you get the idea. Let's take a look at one more example here. I'm going to be using the dollar yen, which is one of my favorite pairs. I'm just really interested in this, particularly with all the news coming out lately. So I've drawn my Fibonacci retracement levels from the bottom of the trend all the way to the top. We're all very familiar with this very strange trend that's been pro-dollar and very weak on the yen, despite the fact that economically, Asian economies in general and the Japanese economy have been doing quite well. So then I drew my Fibonacci fan lines from the same point, from here to here. I'll click on it so you can see exactly my diagonal line goes right along the same level. So now at the time I'm drawing it up here that I'm actually doing this analysis. I was doing it here just recently at the very end of June. And I knew that I had a couple of opportunities where the market was potentially going to create a buying or a selling signal for me, or a buying signal depending on what side of the market I was on. One is occurring right now today, and I knew that this was going to happen between the 18th and the 19th or so, and that if price converged at the same point that those two crisscrossed each other, I was going to take a trade. Now, in this case, I'm looking for a breakout, and I'm gonna deviate a little bit from the way that I've been analyzing the way I've been talking about my analysis, in that I have drawn these Fibonacci retracement levels on an uptrend, and yet I'm frankly much more interested in trading this particular pair short. That's because I'm from a fundamental perspective, I'm very weak the dollar, and I'm becoming much more strong the yen. In particular, as I'm doing this edit here today, we have a whole tranche of new Chinese data that's very bullish. And I think that ultimately that's the risk on the yen is definitely to the upside, meaning stronger yen, which would drive this particular pair down quite nicely. However, I think that this is a great situation for an option trade, a straddle, where you can take advantage of just volatility either to the upside or to the downside, because one thing I can say is that I may not be correct in my projection that this is going to head down, but I would be willing to risk quite a bit of investment capital that volatility is going to escalate right here and probably dramatically. Well, that's a great opportunity to trade an options, to use an option strategy like a straddle where you can take opposing positions, both for the market and against the market. You don't have to use stops. You don't have to worry about the side that you're wrong on because you can price that in when you first do it. And if you want to know more about that, I don't want to sell it too hard, but I am doing a presentation with FXStreet on Thursday that I think will be very enlightening, on Thursday the 26th, that I think would be very enlightening as I go through that specific strategy itself. So, but for this analysis here, I'm thinking I'm going to go short, and the takeaway is, what am I interested in? I'm interested in the fact that price and these two Fibonacci studies are converging at the same point at the same time. That fulfills all my rules, and therefore I'm looking for a breakout. So that's my analysis. The best thing about this kind of presentation is to watch and see how these play out in real time. You saw a couple of idealized examples in the past. Obviously, those are really fun and exciting, but I used good examples, not the ones I was wrong on, to make my point. And let's watch what happens with the pound Canadian as that continues to work itself out. As you saw, that one initially headed down has come back up a little bit, but not broken through support, or resistance rather. And I'm still kind of anticipating that it's going to head back down. We talked about the potential trade coming up on the 30th on the dollar Mexican. So let's see if the price comes back to hit that convergence. And we've looked at what's going on today on the dollar yen. So some exciting opportunities. I think it's going to be a good illustration of this particular technique. And I think that you'll find, if you trade if you plan your trades appropriately, that this has an excellent success rate. And more importantly to me is that it has an excellent success rate of projecting very big moves in the direction that I anticipated that the market would move. So thanks a lot. I know that this has been a real privilege to speak to this crowd, and I know that I've had a good time talking about it. I think that it's a strategy that isn't talked about very much, so combining the ideas behind finding where a retracement might occur or where a trend continuation might occur, as well as when, can be a lot of fun. So thanks again, and we'll be talking to you soon.